All right, let's just get right into it. Is this massive, honestly mind-boggling surge in AI investment the real deal? The start of a true technological revolution? Or are we all just watching a speculative bubble inflate to historic proportions, basically waiting for it to pop? That's the huge question we're going to tackle in this explainer.
So, to get a sense of just how big this is, get a load of this number over $400 billion. And that's not for the whole industry. Nope, that's the projected infrastructure spending for this year alone by just four companies: Amazon, Microsoft, Alphabet, and Meta. It's an absolutely unprecedented amount of money. We are talking about a modern day gold rush.
And yet, right in the middle of all this crazy spending, you've got one of the most important guys in the entire industry, OpenAI's Sam Altman, kind of pumping the brakes. He's on record saying investors are overexcited and that some people are likely to get very burnt. So you've got this gold rush on one side and a direct warning of a collapse on the other. That contradiction? That's what we're going to unpack. Okay, so here's our game plan. First, we'll dive into the pure numbers behind this investment frenzy. Then, we're going to play devil's advocate and look at all the signs that point to this being a bubble. After that, we'll flip the script and explore why this time might actually be different. We'll look at who's really winning and losing right now, and finally, we'll look at the huge challenges on the road ahead.
So, first up, the AI gold rush. I mean, the amount of cash flooding into this space is almost hard to wrap your head around, and it's happening at a wild pace. So let's follow the money. Where is it all going?
Just this year, total corporate investment in AI is expected to hit over $250 billion. And this isn't just, venture capitalists gambling on startups. This is real spending by companies all over the world. A massive chunk of that is going into what's called generative AI, the tech behind tools like ChatGPT, which has just seen an absolute explosion in funding. And all this cash is sending company valuations into the stratosphere. I mean, look at this timeline. A year ago, OpenAI was already a giant at $157 billion. Today, its estimated valuation is a staggering $500 billion. And its main competitor, Anthropic, saw its value nearly triple in just a few months. This is the kind of vertical growth that gets investors super excited and also pretty nervous. Which, brings us to our next section. All this talk of explosive growth and insane valuations leads to one big question. Are we just partying like it's 1999? Let's get into the argument that what we're seeing is just an echo of the dot-com bubble. And honestly, some of the parallels are pretty striking. And this is where it gets really interesting. A report from Apollo's chief economist came to a pretty shocking conclusion. When they ran the numbers, they found that the biggest tech companies today look even more overvalued than the big names did at the absolute peak of the dot-com craze. Just let that sink in for a second. Okay, and this right here, this is where the bubble argument gets really, really strong. A major study from MIT found this huge disconnect between what companies are spending and what they're getting back. Despite all the record-breaking investment, a whopping 95% of companies said they've seen no measurable impact on their profits from generative AI. The money is definitely pouring in, but for most, it's not actually making them more money yet. And this just illustrates that cash burn perfectly. Sequoia Capital estimated that in 2023, the industry spent something like $50 billion just on the NVIDIA chips needed to train AI models, but only brought in about $3 billion in revenue. That is a massive gap between cost and income. It just shows you how incredibly expensive this business is. And it's not just outside analysts who are worried. You've got Nick Clegg, a top executive at Meta, saying pretty plainly that the chance of a market correction is pretty high. And why? His words, unbelievable, crazy valuations. He's basically saying these numbers just might not be sustainable. All right, so the case for a bubble seems pretty solid. But what if comparing this to the dot-com era is just the wrong way to look at it? Let's pivot and explore the other side of the coin, the argument that this time really is different, and that this AI boom is being built on something much, much stronger. This quote really gets to the heart of it. See, unlike the dot-com bubble, which was full of startups that had never made a penny, today's tech giants are absolute cash-generating machines. They literally make money hand over fist. They have huge profit margins, tons of free cash, and that cash is exactly what's funding this entire AI build-out from the inside. And you can see this real money in spectacular fashion with a company like NVIDIA, which is at the very center of all of this. Their data center revenue, which is basically their AI business, more than doubled in a single year.
It went from $47.5 billion to over $115 billion. That's not speculation, that's real demand leading to real, mind-blowing growth. So this slide really breaks down the difference. The dot-com bubble, it was funded by venture capital and debt, thrown at startups that had no revenue. The AI boom today, it's being funded mostly by the profits of the richest companies in the world who are buying all these chips and building data centers to meet a very real and tangible demand from customers.
Okay, so we've got two very different stories, right? A speculative bubble waiting to pop, and a super well-funded revolution that's just getting going. So what's the truth? Let's try to cut through the noise and find out where the real value is.
You know, the best way to understand who's winning right now is this classic idea from the gold rush, the picks and shovels strategy. Think about it. During a gold rush, you can take a huge risk and bet on one person to find gold. Or you can be the one who sells the picks and shovels to all the prospectors. You're pretty much guaranteed to make money that way. So in today's AI gold rush, the picks and shovels winners are super clear. It's the chip makers like NVIDIA and AMD making the essential hardware. It's the cloud giants, Microsoft, Amazon, and Google, who are renting out the space for all this to happen. And it's the other infrastructure specialists providing all the key tools. It doesn't matter which AI op becomes the next big thing, because all of them have to buy from these companies. That's why they are making almost all of the real money right now. And this might be the most important takeaway of all. The AI boom isn't just one thing. It's really happening in two different layers at the same time. On the top layer, you have the more speculative, kind of bubble-like world of venture capital pouring into thousands of AI apps. But underneath all of that, you have a very real, very tangible, and massively funded build-out of actual physical infrastructure. So here's the key idea. The bubble and the revolution can both be happening at the exact same time. So, where does all this leave us? For our last section, let's look down the road a bit, because there are some huge fundamental challenges that are going to decide whether this whole thing actually lives up to the hype. We can really boil it down to three big ones. First, there's the energy problem. An AI query can use 10 times the electricity of a simple Google search. As AI gets bigger, can our power grids even handle that? Second, the profit puzzle. That 95% number is a huge deal. When will these massive investments actually start making money for most companies? And finally, the regulation question. Governments are trying to figure out how to manage all the risks without killing innovation. The answers to these three questions will basically shape the future of AI.
And so we're back where we started. Is this whole thing a speculative bubble just fueled by hype and destined to pop? Or are we actually watching the messy, expensive, and chaotic birth of a truly revolutionary new age? The truth is, it's probably both. The real test is going to come over the next few years as we find out which part of this story, the bubble or the revolution, is the one that will ultimately define our future.